Imagine paying the price of a luxury house for a single flower bulb, not a bouquet, not a rare painting, but a simple tulip bulb. Sound impossible? That's exactly what thousands of people did in the Netherlands almost 400 years ago. And when the market collapsed, fortunes vanished overnight, families were ruined, and the entire country was left in shock. But the question is, why did it happen? And could it happen again? Today, we're diving deep into what historians call the first recorded financial bubble in history, Tulip Mania, a story of desire, speculation, greed, and ultimately, human folly. But this isn't just history, it's a mirror reflecting the risks that still exist in modern market. The year is 1634. The Dutch Republic is at the height of its power. Amsterdam is a hub of commerce, trade, and innovation. Canals teem with ships carrying spices, silks, and other luxury goods from the far corners of the world. The Dutch East India Company is the world's first multinational corporation, offering opportunities for everyday citizens to invest and grow their wealth. Banks are forming, credit is extending, and financial speculation is becoming a daily conversation in cafes and market. It is in this atmosphere of prosperity, innovation, and curiosity that a seemingly innocent flower imported from the Ottoman Empire would ignite one of the most bizarre financial phenomena in history, the tulip. Tulips arrived in Europe in the late 16th century, admired for their striking colors and unique petal pattern. But it wasn't just their beauty that captured attention, it was their rarity. Certain varieties, called broken tulips, exhibited streaks or flames of contrasting colors caused by a viral infection in the bulb. These were unlike anything seen before, making them objects of obsession for collectors. And obsession, as we'll see, is often the first ingredient in a financial bubble. Tulip mania didn't appear overnight. It began quietly, among botanists, merchants, and the upper classes, who competed to cultivate the most exquisite specimens. Tulips were expensive, yes, but not absurdly so at first. A single bulb might cost a few guilders, the equivalent of a modest week's wages. But as demand grew, so did prices. And here's where human psychology enters the story. Scarcity drives desire, desire drives value, and suddenly, a simple flower became a status symbol. People began trading bulbs not for use or beauty, but purely for potential profit. Contracts were drawn up, and markets emerged, sometimes just in the back rooms of taverns. The seeds of speculation were sown. By 1636, this was no longer a niche hobby. Tulip bulbs were being traded in cities across the Netherlands, and prices were rising at an astonishing pace. Ordinary citizens, shopkeepers, craftsmen, even laborers were investing in bulbs with money they didn't have, hoping to flip them for a profit before prices climbed higher. Futures contracts were created, essentially allowing people to buy bulbs for delivery months later. In other words, people were gambling on prices they hadn't even seen yet. By 1636, tulip mania had entered its golden phase. Prices for rare bulbs skyrocketed. The rarest varieties, like the Semper Augustus, reached prices equivalent to the cost of a Grand Canal house in Amsterdam. A single bulb could buy a household's lifetime of goods. Dealers and speculators from all walks of life joined the market, hoping to cash in on the craze. What's fascinating is how rational people began to act irrationally. Normally prudent merchants mortgaged homes to buy bulbs. Families sold heirlooms in coffeehouses and town squares. Traders bragged about their latest purchases as if collecting rare art or gold bars. It became not just about profit, but prestige and status. The growth was fueled by a simple but dangerous combination: the fear of missing out and the belief that prices would always rise. Every purchase seemed to confirm the market's strength, and every conversation amplified the sense of inevitability. A self-reinforcing feedback loop of greed and optimism had taken hold. And then, as with all bubbles, reality arrived. In February 1637, buyers suddenly stopped showing up at auctions. Perhaps it was fear, or maybe simple exhaustion from the relentless frenzy. Whatever the reason, the market stalled. With demand collapsing, prices began to fall and fall quickly. Bulbs that had sold for thousands of guilders were suddenly worthless. Investors who had borrowed money to buy bulbs found themselves facing ruin. The chain reaction was swift. Contracts went unpaid, debtors defaulted, and panic spread like wildfire. Entire fortunes evaporated. Families that had mortgaged homes and sold assets found themselves destitute overnight. What had seemed like a path to wealth turned into financial disaster. The Tulip Mania, once a symbol of Dutch prosperity, became a cautionary tale of collective folly. After the crash, the Dutch economy suffered a shock. Though historians debate the scale, some argue the financial losses were limited to a few hundred traders, while others claim broader social impact. Regardless, the cultural and psychological imprint was enormous. Tulip Mania entered the annals of history not just as a curiosity, but as a warning. Even the most prosperous and rational societies are vulnerable to mass speculation and irrational exuberance. Writers, economists, and moralists drew lessons from the crash. But as we know, human behavior doesn't always learn from history. Governments attempted to stabilize the market by renegotiating contracts and forgiving debts. But the lesson had been learned the hard way. Financial systems, it seemed, were only as strong as the trust and temperance of the people who used them. Here's where it gets interesting. Tulip Mania was not a one-off anomaly. History shows a clear pattern. Humans repeatedly fall for the same trap. The dot-com bubble of the late 1990s, the housing crisis of 2008, and the recent cryptocurrency booms all echo the Tulip Mania in fascinating ways. Consider this. In 2000, investors poured billions into internet companies with no profits, valuing websites at multiples of what even the most successful businesses had earned. In 2008, homeowners leveraged themselves beyond reason to buy houses that could collapse in value overnight. In each case, scarcity, fear of missing out, and speculation drove prices to irrational heights. And when the bubble bursts, the pain is real. Even today, ENTs, meme stocks, and some high-growth tech stocks exhibit patterns that echo 17th-century tulip bulbs. The lesson is clear. Markets can be seductive, but they are fragile. And history, as always, has a way of repeating itself. The psychology is timeless. Desire, herd mentality, and overconfidence create the perfect storm for a bubble. Tulip Mania is not just a story about flowers. It's a story about human nature. So what can we learn from Tulip Mania? 3 things stand out. First, scarcity drives irrational behavior. Even small objects can become overvalued if they are perceived as rare or prestigious. Human desire often outweighs rational judgment. Second, speculation is dangerous without understanding. Buying assets purely because their prices are rising, without understanding their intrinsic value, can lead to catastrophic losses. Third, history repeats itself. Financial bubbles are not new. From tulips to dot-coms to crypto, the same psychological patterns recur. Studying history is not optional, it's essential. Tulip Mania may seem distant, almost quaint, but it is a warning etched into history. Every market has its tulips, every investor faces temptation, and every society risks collective folly. The question is not whether a bubble will happen, it's when and how prepared we will be. So next time you hear of skyrocketing prices for something that seems absurd, whether it's digital art, a tech stock, or the latest investment craze, remember the tulip bulb that once cost more than a house. The lesson is clear. Human nature hasn't changed, and history is waiting quietly in the wings, ready to repeat itself. If you found this dive into history fascinating, make sure to hit that subscribe button for more stories that reveal the patterns of human behavior, finance, and culture. Share this video with someone who loves history or needs a cautionary tale about the seductive power of speculation. And most importantly, think critically before chasing the next big thing. After all, the lessons of Tulip Mania are as relevant today as they were nearly 400 years ago.